And welcome to the retirement results bonus segment just for our podcast listeners and our listeners locally on WDUN. Thank you so much for listening to another episode of Retirement Results. And for this week's bonus segment, we really want to just make sure people are informed when it comes to what's happening in the markets right now. People are concerned with the volatility, especially those who are approaching retirement. Here's what investors, retirees, and pre-retirees should know. And also, I really want to touch on this is a really important time to have your portfolio inspected. And Ford, what would you say to all those out there who are just maybe a little too scared to log into their accounts right now and see how this recent tariff tantrum has affected their investments?
Yeah, I would say you really need to inspect what you expect and also do what Ronald Reagan said, which is trust but verify. We've got to do everything you can to make sure that we're maximizing our hard-earned and hard-saved wealth. If you're not planning on going back to work, let's say you're a retiree, you're already retired, you don't want to go back to work, you really should be understanding what's going on with your portfolio. Now, you don't necessarily need to do a knee-jerk reaction and react and overreact, because those who are, if you sit there and say, hey, you know what, I'm going to go to a money market fund or I'm going to go to cash only during this time, and you miss the bounce back days, you're going to miss a significant amount of income. We've got some really great data in here from Mark DiOrio that talks about how quickly some of these markets actually will recover. So I would encourage people to really be calm about it, but you really should be interested in what's going on and have a plan. And if you don't have really a safer plan, if you haven't invested in a smart risk and smart safe plan together and truly diversified your portfolio between insurance products like fixed index annuities and also exchange traded funds and stocks, and trying to eliminate mutual funds out of it and variable annuities out of it, you want to invest in fixed index annuities, ETFs, and stocks and other products. That's the way to get to a truly diversified portfolio that's not going to cost you too much money in expense ratio. And also, you really just want to get those costs down because the withdrawals from your accounts right now are deadly, because you're taking money out and you're not going to be able to rebound because you're not going to have those assets in the portfolio ready to rebound as well.
Yeah, that's absolutely right. So if folks are looking for some withdrawals right now, try to take that out of sources that aren't invested in the market, because like you said, Ford, you don't want to lock in your losses there at that lower level. But just a few initial details that people should understand. And that's that this recent market sell-off has been driven by policy uncertainty and tariff policy shock. I mean, you have the leaders of major players on a global stage engaging in these trade conversations, and the market is reacting day to day according to how investors feel. And I think something that can give investors a bit of hope that this may not be so bad: the recent market sell-off is not driven by financial system imbalances, unlike 2008. The U.S. private sector is not facing major structural imbalances. And Ford, I would also say that kind of some comparable times, maybe the Fed rate hikes in 2022, or even March of 2020, 5 years ago during the initial pandemic drop, we saw markets rebound relatively quickly. And when that happened in 2020, it was under a Trump administration that made some moves to get some more capital there in the market, get people spending and feeling good about being a consumer again. So those are some things that I think can give people some hope.
Yeah, I think so. And also, there's a lot of hope in this update from Mark DiOrio, our Chief Investment Officer, with Brookstone Capital Management. Our Brookstone Capital Management, our registered investment advisory firm, it's got over $8.5 billion under management. And, so there's safety in numbers there. There's also, we've got a significant amount of CFAs that do a great job at planning all of our portfolios. So we appreciate them. But also, history offers some useful parallels to the Euro crisis contagion in 2011, the oil crash in 2015, the Fed rate hikes in 2022, during which time the equity market fell off 15 to 20% in all those markets. With the equity market down around 70% from record highs, we may be nearing the tail end of this sell-off. This has been an extremely quick market decline, Sam, for sure, with the market dropping 10% in just 2 days. That was Thursday and Friday of last week. There've been only 3 other times the market has dropped that quickly. October 1987, November 2008, and March 2020.
Yeah, and just wrapping up some of the final points here in our bonus segment, Mark DiOrio, the chief investment officer at Brookstone Capital Management, said the market may be fast entering what he's calling peak tariff tantrum, with the market's fear gauge, the VIX, soaring to levels consistent with a market bottoming phase. So maybe investors who have some money parked on the sidelines, maybe looking to invest, can get in at a time where prices are good. No matter how bad the news is, Mark DiOrio says there's always a price at which you want to be a buyer, and this time is no different. So for maybe some people looking at this as an opportunity, if you're getting close to retirement or you're in retirement, maybe living on more of a fixed income, this is time to really inspect your portfolio, take a look at what you're invested in, what's your risk level. While we're in there, we do complimentary portfolio analysis for anybody who listens to the show and gives us a call. Let us show you what you're paying in fees and see if we can help you do better, actually, by deleting fees in your portfolio, either through a bond replacement or possibly just giving you a better management fee compared to what you could be paying now with your current advisor.
Yeah, I mean, listen, also the tech-heavy NASDAQ index, I want to give you guys some specifics here, has declined a little over 20% over the last few weeks. However, historically, after the NASDAQ has found its bottom, it has taken an average of just 13 trading days for the NASDAQ to rally more than 20% from that low. So be careful about selling off too quickly here and make sure you stay invested. Listen, if you got questions about how to deal with these tariffs, a question about your portfolio, question about how to delete the IRS and being your partner in retirement, how to eliminate fees within your portfolio and reduce that expense ratio and reduce your risk level, I'd encourage you to reach out to us at retirementresults.com. That's retirementresults.com. And we look forward to helping you and get started right away.